You know the old saying, meet the new boss, same as the old boss? So we've been hearing about the London PM precious metal silver fix going away August 14th, and now the new day has started, and there's going to be a new price setting mechanism, and it's electronic, and it's not these 5 or however many, I think there's 5 total people that sit in a room together, all bankers, who determine the morning fixed price and the afternoon fixed price amongst themselves. None of which are transferring any metal, they're just literally setting the price of silver. So they said, well, we're going to have this new electronic bidding auction style price setting mechanism that's going to replace the old 100-year-old London PM fix. This is a much better system, and it's going to be ran by Thomson Reuters and CME Group. Well, CME Group had something to do with it. I thought it was Kitco at one point. So this email from Big Swear. Moneymorning.com. Here's what the new silver fixed price means for prices. And here's how the new procedure will operate. Here's a little section of that. The new silver pricing mechanism. At midday, London time, an electronic auction will take place on a trading platform provided by none other than the club, CME Group. Members will begin a bidding process at a price based off quoted rates for silver across the market. Members will process buy and sell volumes at the initial seed price for 30 seconds. If after that auction, buy and sell volumes are in tolerance, that is, if they are within 300,000 ounces of each other, a new price will be set. If not, the auction will restart at a new price determined by an electronic algorithm. Auctions will continue to reset until the buy and sell orders are properly balanced at the prevailing price. The list of members within the price discovery mechanism has yet to be formally announced, but the application deadline for participants clears today, Thursday, which was yesterday. Rhonda O'Connell, head of metals at Thomson Reuters GFMS, told Money Morning in an email that the initial members are largely from the banking sector, but there are, quote, hopes that that may expand into industry as time goes on. What do you mean it's largely made up by bankers, and hopefully we'll have some industry participants in the price setting mechanism later on? So rather than have the group of 5 bankers in London calling on a private phone call setting the price, those same groups, literally now bankers, are going to do the same thing, but it's going to be electronically done now, and there's going to be a little auction, kind of little different, where they auction, buy and sell. None of which is actually buying and selling any silver. This is all paper. There's nobody from the industry. There are no minor companies, producers in on this, on any of these seats to participate in this auction of buying and selling. So how is it that one banker can buy or sell? Doesn't someone need, where's the supplier? Where's the miner? As well as the industry people who want to buy the metal. Jewelers, solar panel companies, precious metals dealers. None of these people get to sit in on the action? It's, quote, initial members are largely made up from the banking sector, but there are hopes that may expand into industry as time goes on. I'm sure the bankers will give up some seats to let industry come in and help with the bidding process. So Big Swear says, what was that? Does anybody know what the hell they just described? Where are bidders buying physical silver for delivery, and where are the sellers delivering that metal? This isn't a market pricing mechanism for silver at all, once again. How hard is it to set up a market that has legit physical silver buyers wanting to take home metal and legit physical silver sellers wanting to sell and deliver metal? And don't you love the line where they were largely from the banking sector? It's only bankers bidding against bankers, again, on a phantom electronic market. But it shouldn't matter to us, because we are watching what happens to the silver derivative contracts that are still outstanding and are supposed to settle at the silver fix, which doesn't exist anymore. Hopefully all the silver bugs out there will yell at the top of their lungs tomorrow morning when they announce the new London silver price. The fix is in again. Where is the promised transparency? Where is the physical silver being exchanged? Where is the oversight and regulators making sure each bid is real and each offer to sell has deliverable metal that will actually get delivered? Why is it so hard to set up a physical market? Big swear. Well, it's not hard to set up a physical market at all. Look around you, there's physical markets for everything. When they created these commodities and said, you know what, we're going to call them commodities, we're going to call oil a commodity, we're going to call gold and silver and copper and platinum, all these metals, we're going to call those commodities. Wheat, corn, everything, commodities. Keeping in mind, any and all commodities are something normally you would look at if you were wanting to see inflation or how's, you know, what's the price of everything, is the price of everything going up. You would be able to look at all commodities and determine, man, prices are definitely higher than we'd like them to be. There must be some serious inflation going on. However, if you have the ability as a government, let's say, right? Because that's who this is about. You know, when inflation kicks in, it's because the government has been blowing through all its money, borrowing excess amounts of money to keep it afloat, and they're trying to hide that fact by hiding inflation. So it's critical that the government hides inflation and that type of thing. At the same time, it is also critical that you do not have any competing currency, anything of value that competes against your currency as a country. You cannot have that. Well, the interesting thing is commodities do that. And one commodity out there, or two technically, do both, gold and silver. They can tell you what inflation is relatively quickly based on the price of those items, gold and silver. And they can also be a competing currency, because if the prices of those items rise, which are showing you there's definitely inflation in your country, they also compete against your country's dollar, because people want an asset that rises in value, and one that rises quite significantly is where people are going to want to, what they're going to want to own. They're going to want to have it, and they're going to want to treat it as a dollar valuable, you know, asset. Think about when silver was $3, $4, $5. Now it's sitting at 20, 21. Imagine when it was just in 2011 when it was 49, 50 bucks, whatever. Man, it was only $3, $4 not all that long ago. That would be a hell of a sign for inflation, and a hell of a sign that this damn thing's an asset. I don't want dollars, I want gold and silver. So, how do you control all that? I got to control something that's a threat to the dollar. I've got to control something that shows inflation. You call these things commodities and set up a commodities market where it has the appearance of a market where people buy and sell and trade, and they do it with these pieces of paper, which is strange. Why, you know, if people really want gold and silver, why are they trading these pieces of paper that are essentially setting the price? I mean, don't you want the asset? Don't you want to own it? When people say, yeah, but who wants to lug around gold and silver? You can buy the paper, price goes up a little bit, just sell the paper, now you take your profit. You're going to sell them for dollars anyways when the price was high, weren't you? Yeah. Just play the paper game. You could do it digitally from your computer. You don't even have to leave your seat. Oh, sounds pretty promising. Yeah, until they slam the price down on you. Then it's not too promising at all. So, What have they done here? Nothing. Meet the new fix, same as the old fix, except they've said, well, rather than phone calls, we're gonna now do it digitally. So in other words, the bankers don't even have to get on the phone anymore and sit on their little fake round table and discuss the price of silver and say, oh, well, man, we've got some clients today. If the price of gold is above $1,310, we're gonna have to pay that client millions. But if it's lower than 1310, even 1309, we don't have to pay out. Oh, well, you're one of our, we're all club members. I mean, shit, that's who this is. This is a club member gathering. Guys, I'm gonna say we set the official price at $1,309 today for gold. The 2 p.m. fix. All in agreement? Say aye. Aye. Oh, all 5 of you agreed. Good. See you guys later. 2 p.m. comes up. There's the fixed price. Client of was it HSBC that they did this to? You don't get your millions of dollars. Matter of fact, you may end up owing us some, because the price wasn't where it needed to be for you to make that money. So they have to control the price through the commodities market. They don't have to own a single commodity. They don't have to, because they're just selling paper back and forth to themselves. So if you have one company, let's say JP Morgan Chase, and they create 2 subsidiaries of JP Morgan Chase, but they're subsidiaries, and we'll just call them subsidiary A, subsidiary B. So A buys massive amounts of paper contracts, so many that they've got more contracts than anyone else combined. Not even close. If you took every other contract, paper contract that's out there, outstanding, let's just say gold for this example, they've got more gold contracts than everybody else combined, not even close, okay? Now they get to determine where the price goes just because of that fact alone. They simply hold on to the gold contracts, don't put too many out there to sell off on the, quote, open market. Therefore, the regular citizenry and everyone else out there are participating, and all of a sudden, the price starts to rise. Man, the price is rising too much, guys. Time for me to flood the market in an instant. Massive, huge, enormous sell order comes in all at once. Wham! Not enough buyers, because again, the regular people that participate on a normal daily basis aren't there to buy all these contracts. There's not enough people. Therefore, price goes down. Goes down some more, still no buyers. Goes down some more, still no buyers. Up, got some buyers. Price levels. $20, let's say, less than where it was at moments ago. So the question is, well, if there were no buyers, how the hell $20 later is all of a sudden massive amounts of buyers show up? Is it that much of a deal that $20? I mean, it's only $1,300. If it's $1,320, and it drops $20 in mere, minutes, all of a sudden people come out of the woodwork for that? Is that really what happened? Or did subsidiary B automatically know, because they're part of the club, they know exactly when to buy, they sold to themselves, and their computer, again, this is all, you can set buy and sell prices on your computer with one single account. If I was some multi-billionaire, I could set up one single trading account in front of me and just type in there, when I go to place my buy order, when the price is such and such, or right now, market price, give me, $2 billion worth of gold contracts right now. Buy. And all of a sudden I'd have them. And I could then immediately, as soon as I bought them, I could immediately put a sell order in that says, only sell when the price goes down $20. So it's $1,320, let's just say, right? It's $1,320. I did a $2 billion paper contract, all these tons of contracts to equal $2 billion at $1,320. I sit on it, and immediately, once okay, got them all, got it, good, all right, transactions complete. Immediately sell order all of those same contracts if, and you can put, that's what they call the stops. You put them in at 13 for the price of 1,300. Now, here's the interesting thing. Normally when you go to sell something, you sell it at market price. So if the market price is still $13.20 and I go and put a sell order in, it's normally going to say, well, you can't really sell it for less. You can sell it for the market price. If you put it in there for less, chances are it'll be gobbled up immediately. But again, it is only going to get gobbled up immediately if there are enough buyers out there buying. And there's not going to be. So this is why it's a coordinated attack on again, subsidiary A in this example and subsidiary B. I personally don't think the bankers are that stupid to use their own subsidiary companies to buy and sell to each other. I believe you're going to have like a subsidiary from JP Morgan buying and selling to a subsidiary of HSBC or Citigroup or Bank of America or just some other bank, so that we can't say, hey, you're selling to yourself, this is clearly fraud. No, you're just selling to another club member, and they know, coordinated attack, hey, today at 1 o'clock there's gonna be a huge sell order, we need to knock it down about $20. Okay, so as soon as the sell order goes in, all of a sudden they're selling and they're buying at, but they're not buying at $13.19. They're only buying at $13.00. So you say, well, yeah, so this guy who's sitting on it at $13.20 just lost $20 per contract per ounce of gold, and there's, and just for example, $1 billion order out there. They just lost $20 per ounce. They took a huge beating. Who would do that? And this guy, on the other hand, he got a $20 discount because he got it at $1,300, and he thinks the price is going to go back up normally. And he's going to wait for the price to go back up to $13.20 again, and then he's going to sell. And old JP Morgan subsidiary is going to be over here on standby waiting to buy. So now they bought in at the low. This guy over here takes the beating. JP Morgan gets the discount at $1,300. Price goes up again, $13.20, $13.25, $13.30. Okay, time to sell. And then this one waits and waits. Well, at $1,300, boom, then I buy again. The money means nothing. When you see JP Morgan posting billions of dollars quarterly profit year after year after year, quarter after quarter after quarter after quarter, this little minuscule couple $1 billion or whatever they need to move the market means nothing. If they have $1 billion loss, it won't even show up, because the $4, $5, $6, $7, $8 billion, $10, $20 billion for the whole year that they made in profit, minus the $1 billion they lost manipulating the price of precious metals, means nothing. So they show a nice $19 billion profit for the 2013 or whatever year, 2014 year. They have to do this. They are part of the government. JP Morgan, the bankers are the government. Did any banker do any time for any crimes they've committed, from the mortgage fraud, securities fraud, all of it? 2008 massive collapse. Did anybody do time? John Corzine, MF Global, they stole their account holders' allocated account money. That's it. They got nailed. Did he do any time? His own secretary said that we had to get authorization to make this happen. Okay, and John Corzine's that guy. He's the CEO, right? Well, yeah. John Corzine? I don't recall. And I'd like to look at those emails, but I've already resigned from the company, so I don't have access to those emails. So I can't recall what they said, what my response was about authorization or not. Okay, so no one at the company can produce the emails. Hey, who took over since you resigned? Get the emails. Nah, we don't even want to talk about that. Just let them go. So the bankers are the government. So they're like this. They work together. You guys are going to be allowed to manipulate these markets. And when you finally have to take the fall, and the exposure comes out, and the corruption and fraud come out, and we have to do something about it, you can just kill off some employees and tell the whole world that these were the ones responsible. Don't worry, it's not going to happen again. And they've committed suicide because they felt so bad about themselves. Which would make sense as to why 20-something plus bankers have died in the first half of this year alone. many of which related directly to commodities trading and securities trading and all kinds of stuff like that, which is exactly where you'd be pointing the finger at. If you were a regulator or someone investigating who committed this fraud, oh, well, they committed suicide. When you and I both know they were killed. So, they're trying to maintain control. They're just switching stuff around, shuffling. We've got a new system. It's more trustworthy. Don't worry, it's gonna work this time. Well, who runs it? The same people who ran the old one. And those same people were entirely made up of bankers. Yeah, I know. Right. They have to do this because they feel this is for the national security of the United States of America. We can't have competing currencies, i.e. gold and silver, and we also can't have inflation staring people in the face, so we will control prices of food and all commodities on the COMEX market through the same mechanism I just described with gold and silver. They can do it with wheat, they can do it with cotton, they can do it with the barrel of oil, which is why you see high prices for oil, but everything else is low prices. They've stabilized the other prices, but oil never seems to be stabilized. Why can't we have $30, $40 a barrel oil? It doesn't cost anywhere near, not even remotely close to that kind of money to get it out of the ground and to manufacture it, not necessarily manufacture it, but whatever, I can't think of the word, refine it into gasoline. So, this is all about controlling of everything. So if your country is the only country on the face of the earth in which all other countries look to say what's the price of such and such today, even though well, it's in US dollars, we convert to our currency, this is what, okay. And since all countries, well, I should say all because they all don't, but many of the biggest player countries produce oil. So they're going to want to say, hey, where do I get the most money for my oil? Right now, the Americans setting that price is looking pretty good for us. Matter of fact, we don't see a reason in the world to change it. It looks real good. Because our dollar is nowhere near as strong as the US dollar. And since we're getting US dollars for our oil, we convert those to our currency, we're making a lot of money. So that's the reason why gold and silver and food and everything else is suppressed and held down and constantly fought against to keep the prices stable. Stable meaning not too high. Meanwhile, oil can go wherever they want it, and as all you have to do is look up Lindsey Williams 2000. Just look up Lindsey Williams Granada or just Lindsey Williams non-energy crisis. That was one of the original videos I ever saw of him from 2006. I watched it in January of 2007. He talked about how they're going to bring the price of a barrel of gas from where it currently was at, which I don't recall, it may have been around $60 or $70 a barrel. They're going to take it to $150 a barrel soon. He was told this by his elite friend. First time I ever heard anything like this, yet I didn't see any prices change, so I didn't really care. And then 2008 rolled around. Prices jumped to $150 a barrel in July. 146 or 147. While that was happening, he gets back on the radio, which at this point I'm trying to find him. I find a radio show he's on online. And he says, by the way, I told you this is where it was going to go. I had word from these people. They never ever lie to me. They just told me it's going down to $50 a barrel in the next several months. And then lower. And he said, I've said this before. I've been accurate before. It's going to happen. And then people were like, you're out of your mind. It's going to $200 a barrel. There's no end in sight. This is crazy. And what happened? December, I mentioned this before. December 2008, I looked up the price of oil. It was 50 bucks. $50 a barrel, just as he said. I read another article a week or two later. Saudi Arabia to cut 2 million barrels of production a day in order to help boost prices. Because they're thinking supply and demand. So we'll just cut off the spigot and demand will go back up. Because the supply is not going to be there. No, another week or two went by and it was $40 a barrel. How is that possible? You just cut off supply. That's because the price is set on the COMEX, aka Wall Street, but not exactly Wall Street, it's two separate exchanges. The commodities market. He said they were going to do this to squeeze and bleed these Middle Eastern OPEC nations, etc. Because now that they've built up their economy from all these years and years and decades of good priced oil, they can't afford to be living off of $40 and $50 a barrel oil, so they're going to have massive economic repercussions. The interesting thing here is that I never really saw those economic repercussions. So now, of course, the price is back up to $100, $110 a barrel, fluctuates. And everything's back the way it was. So are we allowing them to make a lot of money on this oil because they're going to have to spend a lot of money defending themselves, or did I say defending themselves? No. Starting wars. They're going to start the wars, so they're going to need to buy munitions and tanks and planes and jets and all this stuff. So they're going to need a lot of money to do that. And just as coincidentally, as I've said, when they've played this game out, the elite, they take us all to war. So they can't have a poor nation defending itself because they need that nation to have lots of money to buy the arms from the military-industrial complex, which is also part of the banker club, so that they continuously make money. This is what they do throughout history. They finance both sides of the war. That's how it is. Take care.